Welcome everybody. How's everyone doing? Okay, let's get started. So first of all, today is DXY. Also take into account that there is some volatile news today, FOMC later at 7 p.m. What that means is that you can get in early on a trade. You can catch a pretty good setup since volatility is caused by the news. Okay, so first of all, let's get started with the DXY. What can we see? We can see that yesterday we forecasted some equal highs and a potential stop hunt, but once this occurs, we were anticipating these equal lows to get taken out, which was in confluence with a third tap of this trend line. 1, 2, and a third tap. Normally after a third tap of a trend line, there is a fake out. This is what I call a boomerang. So there was an unfilled liquidity, is what we forecasted yesterday, and they closed back inside, which will likely push price and retest the equal highs and also some unfilled liquidity to the left. Also, there's further plans. So there's plan B, there's plan C, plan D. But for now, what took precedence was the first to take profit. So that was the game plan for DXY yesterday. What happened next was that it actually played out pretty perfectly, but now we need to adapt to what the market is telling us. So okay, so this setup now, you need to evolve it, update the pattern. We can obviously delete this piece of information. This level now has been breached, the liquidity has been filled. So for now, this is what's most important. There's a lot of room to the upside. So as you can see, there's room where I'll be looking to get involved on some liquidity to the left as a plan A. Plan B will be to take out these highs and tap this level of liquidity, which hasn't been filled. You can see it's broken with momentum and it's failed to retest multiple times. And again, this would be plan B, but for now, this is an important point of interest for a potential sell setup on the DXY. On the bigger time frame, if we zoom out to the 4-hour, I am expecting further downside towards this level here, which is in confluence with the third tap of the outer structure. So that's the game plan for the DXY. Next on the list is dollar yen. Okay, dollar yen is a trade that I've been patiently waiting for. It's finally showing some clear price action. As you can see on the daily time frame, it's now tapped a level of supply. It's rallied with momentum, but on the 4-hour time frame, it's telling a different story. There's been lots of compression to the upside. Normally, when you do see compression such as this, you know, when price is really squeezing, there's normally a breakout to the upside. But what happened next? There was a breakout to the upside, then price has slowed down and it formed a large compression, bit of a rally, and it turned into a larger compression. So price is constantly updating and evolving. Now there's some even further compression right now at a point of interest. So if we go and zoom in to what's actually happening with dollar yen, what can we see? Let's go to the 1-hour time frame. And we can see, okay, so price has rejected of this level here, this outer structure. It's also filled a level of liquidity that was unfilled. This is why we anticipated a potential reversal from here. So that's been ticked. Now there's been a compression to the upside / head and shoulder. It's broken with momentum. We also forecasted yesterday's forecast on those who attended a breach of this equal high to tap this level of liquidity as plan A for an entry to take out potentially these lows. So that was plan A. I didn't take it since I was in Euro USD. I don't want to be over correlated, but this was actually a trade that maybe some of you could have taken. Could have been a pretty decent trade if you just entered it here. Now, even though I forecasted it, I mean, I'm not going to take it. I'm in Euro USD. I don't want to take too many euro pairs. So this could have been a pretty decent little trade there, but it's fine. There's always an opportunity around the corner. I'm not in Euro USD anymore. So now I'm looking for an entry on dollar yen. So plan A was valid. It triggered. Plan B was also a break of the lows, which has now been completed. So we've got a broke of the lows. As you can see to the left, it's taken out the lows. Now it's forming a complex correction. So now the price is pulling up, making new highs. The highs and the lows for me is irrelevant. Even though it's making higher highs and higher lows, does not mean it's a bullish structure. It's just a complex correction of the main original move. As you can see, it's broken with momentum. There's commitment from the sellers that took out the main swing low, that rallied and made a new high. So right now, this is the most important piece of information. So what am I expecting? I'm expecting a few scenarios. So first of all, there is some unfilled liquidity here to the left. So I'm expecting either a reversal from here for an entry. Obviously, if we zoom out on dollar yen, there is actually a lot of room to the downside. We can expect price to retest the start of the original move, but I'm going to be a little bit conservative and look at be focused on the main first take profit. I normally bank 80% of my take profit at TP1, and the rest for these sort of trades, I'll leave it running at 20%. So if we go back to the 1 hour, what can we actually see? Let's build a bit of a case study. So okay, price has rallied in momentum, there's a bit of compression, it's formed an expanding pattern. What I like about the expanding pattern is that it eliminates double tops. So again, we see a double top, many traders will potentially sell it. However, if there's an expanding pattern just above, this is a double top, a stop hunt more or less. And what we do have as well is some liquidity to the left, some unfilled liquidity to the left, which is in confluence with the third tap of this pattern. So this is plan A. As you can see, plan A would be approximately somewhere here. Plan A. Then we've got plan B, which is what I'm more interested in. And then further, we also have a plan C just above here. So whichever comes first, I'll be looking to get involved. However, I would rather set a limit order at plan B and not plan A. The reason being is because plan A is usually more risky. So what I like to do is once price has triggered the previous liquidity, as you can see here to the left, form some equal highs, has a stop hunt of the equal highs and confirms a new lower high since it's taken out these lows, then we've got a complex correction. So plan A at this level, they're good trades, but I personally don't like them. What I prefer to see is once liquidity is triggered with a confluence, such as the third tap, I want to see on the smaller time frame a rejection and a break of structure is very important for me. Once I get break of structure, as you can see from here, then I'll look for the unfilled liquidity to the left to take this pair to the downside. So that's the game plan for dollar yen on plan A. No limit orders. It will be a limit order once there's a break of structure on the 15-minute. So that's the game plan for dollar yen as plan A. Plan B now is this potential scenario. So okay, we've got a stop hunt of these equal highs, and we also have momentum to the downside. We've got a correction to the upside. However, if we can also take out these highs at some unfilled liquidity here to the left, that's in confluence with a trend line retest, then this would be a nice level of interest to get involved. So that's the game plan for dollar yen. Also, plan C is just further up, which is a third tap of the outer structure. So as you can see up here, so I'm prepared for multiple scenarios. If I have a perfectionist mindset and I'm anticipating a reversal from the outer structure with a limit order, for example, and I miss two potential scenarios here, then I've missed out on a trade because I had a perfectionist mindset. It's all about having a probability mindset, So that's the game plan for dollar yen. Plan A, plan B, and then plan C. Next on the list is Euro USD. Okay, so Euro USD again is a trade that we forecasted. Remember guys, we forecasted a stop hunt of this equal highs, which was in confluence with some unfilled liquidity on a smaller time frame, and a third trendline fake out. So I got triggered in. It was a good trade, and I decided I had to take profit here, but I actually came out after this wick candle that rejected this level here. Once that occurred, then price consolidated for a while. I saw some equal highs, and I thought, you know what, let me just recover the remaining of the stops, since I banked 80% of the trade here and 20% here was now triggered out. So Euro USD was a really, really good trade. I'm happy with it. Yes, can it go lower? Of course it can, to, you know, TP1, 2 and 3, but, you know, I have to adapt to what the market is telling me. So Euro USD was a really, really good trade. In terms of what could happen next, let's see, you know, we should be updating the pattern. This now becomes irrelevant. Don't really need this anymore. Don't really need this anymore. So now price has formed a larger pattern. It's in the middle of no man's land. I do expect some form of a decline to retest this outer structure. However, I'm also vigilant that price could still potentially form some form of an equal lows. If I see this equal low schematic, then I'll look to get involved on the first plan A setup. And this would be a really, to be honest, this is a long-term trade. So you can see here, take up the main swing high, unfilled liquidity here to the left. So this particular schematic, I will be looking for it at either plan A, plan B, or plan C. So that's the game plan for Euro USD. Also, the other more conservative schematic would be a rejection from the level, whether there's equal lows or not, and a stop point, or even just a rejection. I'll be looking for a break of structure. So you can see here to the left, and the main move that took at the previous structure, I'll be setting an order there. So this particular schematic would be plan B, and that's plan A on either these three scenarios. Okay, next on the list is Euro Pound. Okay, Euro Pound. So Euro Pound has been a bit fun. You know, I've taken some trades here, some good winners. This was obviously the trade that I thought that I reviewed yesterday actually, where I got in, price then dropped towards my level. I decided to close it on this candle since it had lots of momentum and it formed new equal lows. So I thought there's a high chance of it taking me out, and it did. You know, so I protected some of my capital. You know, I took like a zero, maybe a 0. Around a 0.2, literally a 0.2 R. After it would have triggered my stop loss, it did actually reach a risk reward of a 16R, which is unfortunate. But however, my take profit was approximately just above this high here, so that's 13R. I missed out on it, but just maybe move my stop loss 1 pip higher. I was a little bit too aggressive and greedy on the stop loss, so lesson learned there. Could have been a good winner, but it wasn't. Next on this one now, we can see that there was some equal lows and some unfilled liquidity here to the left. Now, remember what I keep on mentioning every week is when price is approaching your point of interest, how does it approach it? Does it approach it in a momentum manner, such as this? You know, you've got momentum, small compression, and then some momentum. Or does price approach your level in a compressing manner, such as this? You know, price is just slowly approaching your level. Which one is more likely to reverse from? This piece of information, momentum, correction momentum, is it likely to reverse from here, or is it likely to reverse from a compression schematic? So we've got compression here. What happened next? Momentum to the upside. You know, we've got some compression here, momentum to the upside. We've got some compression here on the flip side, momentum to the downside. So what happened here? Was this compression or was this momentum? We can see large momentum, then we've got a correction and then momentum. You know, if I saw this piece of information, however, tilted towards my level, I would have taken it. You know, I had my order. However, when I saw momentum followed by a correction, especially after this strong bearish candle that took out these lows, do you really think I'm going to hold my trade? No way. So I decided to close it. I decided to delete the order, and I saved some capital because it would have actually hit my stop. So that's a good lesson learned, just to recapitulate on this particular schematic. Both very, very important pieces of information. So right now on euro pound, I'm expecting a break of structure, a retest, look for some equal lows. Once I see some equal lows, look for some liquidity to the left, and then I can look to get involved on the long-term position on euro pound as a take profit 1, which is up here, and take profit 2 for euro pound is actually, this is take profit 1, take profit 2 is the start of the pattern. As you can see here, the start of the original pattern, and the main target for euro pound is actually the start of the main swing that took out the previous lows, equal lows. So that's the game plan for euro pound. Really, it's all about remaining patient and letting the market come to you. So that's it for euro pound. I just need to wait for it. So that's it. Next on the watch list is New Zealand CAD. New Zealand CAD is a pretty basic, simple setup. If I go on the daily time frame, you know what's actually happening. We can see that price took out the swing high, filled some liquidity that was in confluence with a third type of structure. So what's happened next? Price rallied the momentum, and now it's likely to approach this third type of a trend line. So if I can find a setup in between, why not take it if I know that price is likely to come down here? So we go to the 4-hour time frame, and we do see an expanding pattern. Now, obviously, if price approaches my level, then I'll invalidate the setup, but I am actually expecting some form of a rejection, and then I can wait for my schematics, either a compression or I can wait for some equal highs and let this point of interest trigger, and then I can look to get involved on a continuation to the downside to confirm the third tap of the outer structure, which is in confluence with some unfilled liquidity. As you can see, it rallied the momentum and it failed to retest, so there's unfilled liquidity. So that's the game plan for New Zealand CAD, keeping it really, really simple. So hopefully you guys enjoyed today's live stream, learned a few nuggets, and are covered and prepared for tonight's FOMC. Good luck, traders. I'll see you again tomorrow. Take care, everybody. Bye-bye.